All right, Katie,
Hey Dale, good
Fairlead
morning.
Strategies.
Yes,
Yes. How are you?
I'm good. I'm good. Enjoying the
Uh,
summer.
okay, well, good. The key question most market participants are asking is, was that a low in the S&P that's going to generate a new all-time high, or should we be selling retraces in the S&P?
I think we want to be selling the retrace on this one. We're seeing it as a short-term low, and that's already evident, I guess, at this point. The S&P future is now about 5% above that low.
Yeah,
And with that, we do have this pretty cool positive divergence in the daily stochastics. So
yeah,
I do think we'll get more out of the bounce. If you notice here that the green line, that's the 50-day moving average. It also aligns with the upper boundary of the cloud. So that's our sort of so-called initial resistance area for the futures. Back
okay.
here, we had sort of a similar price action,
Where's
right?
that come in, Katie? 5,500?
So yeah, 5503 initially on the
Okay,
futures, so the front
all
month.
right.
And if we go back here, April saw the pullback right into the cloud, and this marked a pretty good breakout. So if we saw that, that would, maybe give a little extra to the relief rally. However, it's a little different than April was.
April.
Yeah,
Yeah.
because we
More
have
damage? More
more
damage?
damage, yeah, and
Okay.
and you can see it better on the cash, but you can see with the
Yeah.
MACD on this weekly, you have a lower high, and in April we had still no negative divergences there, and you can just see the negative
Yeah.
momentum intermediate term, and with that we have pretty widespread overbought downturns on the weeklies, and that includes pretty much all of the mega caps, even Apple, which has held up relatively well. You
Yeah.
have like here's Apple on the weekly bar.
Yeah.
You see this good follow through, almost reached the measured move objective from its breakout. And now you see again here another negative divergence and downturn. So it feels like we want to sell into strength just to avoid what could be a seasonal September corrective phase.
Do you have any area in mind? If we take out that low 5,100, could it be 4,300, 4,500,
Yeah.
or we're just gonna, just simply just, take out the low, or because
I
under that low, Monday's low to me on many different instruments, unrelated, even though they all kind of, it's all been one market. Um, Under Monday's low, the market's going to look, all these trades are going to look very, very negative to me.
Yeah, I would think so too, especially if
Yeah.
it happened quickly, right? Because then you'd
Yeah.
see some bear flags unfolding. But I think we'll get a little bit more out of it. Up, this is the S&P cash on the daily, and
Yeah.
again, here you see that it held the cloud. In terms of levels, so the bottom of the cloud as of today will be 4287, or I'm sorry,
Uh,
5287.
Okay.
You see how it moves higher over time.
Yeah.
The secondary support is, I'd say, let's call it roughly 5,000, right? A nice round number. It encompasses a previous gap, some lows, and the 200-day moving average, all
Two.
in that zone.
Okay.
The way the weekly gauge is set up, I would say 5,000 would probably be conservative as a downside objective, just based on how much room there is to oversold territory and
Okay.
usually how long that takes to get there. So we feel like 5,000 is too conservative, albeit a support level, but maybe you see, sort of a stall or pause
Stops
there.
and holds
Yeah,
for a little bit, then gives way.
this
Yeah.
is the
It to
secondary
me.
level. Yeah.
Yeah. Okay. All
So
right.
if you go back to the former resistance from 22, that's around 4810. And you
Yeah.
see that it aligns with the Fibonacci retracement here. So the 4810-ish to the 4837 area, that's your secondary and definitely more significant support. You see
That
how it
was a
aligns
breakout,
also.
Katie, at 4,800 from the 22 high, or
Oh yeah,
21
so
high. Yeah.
hmm this was our first good breakout here, and then
Yeah.
obviously a subsequent one. I think this though seems too aggressive, right? So 5,000 maybe too conservative. This
Okay.
4,800 plus level a little bit too aggressive, perhaps based on where these stochastics stand right now.
Okay. Well, I was long vol, but
Oh,
that
good.
surprised me. Okay, I want to ask you what you were thinking when you saw that happen, and if in some way, first of all, I know there were ETF funds that were executing selling vol strategies, and these guys had just been picking up quarters off the sidewalk for years. Only
Yeah.
time they got tested were some tests. VIX would get up to 20, then they'd
Mhm.
sell vol and go back to 12.
Right.
But even though it was lopsided, the positioning on it, and I think a lot of it was short covering. I'm not even sure if it traded. They put no premium in the options when this happened. It's really, you could probably, I'll never trade a VIX product again. Okay.
It definitely is high risk. I advise the same to my
Well,
clients.
it's not high risk. It's crooked. I had
Well, yeah,
I had
unfortunately.
20 calls, 20 strikes. It went to 60.
Wow.
They put no premium in there. It should have
Wow.
been 40 intrinsic,
Yeah,
or
yeah,
at least 20, 30. You know what it was?
no.
4.
Oh my God.
So they saved their asses by not, making the market.
Yeah, that's
Uh,
really tricky. So,
anyway, but besides that, enough of my violin playing. Just another interesting war story I have after doing for so long, where I should have made money and I didn't. Um, does it give you some type of vibe that all is not well when the VIX can do a round trip like that in 24 hours, that there might be some issues with liquidity,
mhm.
or just market structure?
Well, listen, any kind of VIX spike of that magnitude is definitely a little bit jolting, and it does put us on the lookout for a greater loss of momentum. I mean, the long-term momentum behind the equity market is still positive. However, this suggests that we'll get into more of a neutral phase, right? Because if you go back and you look at past VIX spikes, the big ones like this one,
Yeah.
they do tend to give way to markets, equity markets that are really just more subdued at best in terms of their upside progress, right? It's more sideways to lower than it is a bull market cycle.
So,
So,
yeah.
yeah.
So it's like there was a shock. The market had
Mhm.
an auto wreck,
Yeah, it was
and
definitely
it's in
jolting.
shock trying to stabilize now.
You can see it
Uh,
best really on this monthly chart, just the magnitude of that,
yeah.
and also the
Yeah.
magnitude in terms of the impact. We started talking about it in May when this monthly MACD started to turn, and then we
Yeah.
got the more decisive upturns, of course, with this like jolt into the high volatility cycle that we think is now underway. So our call has been that as of, I guess it was April of 23, that we were in a low volatility cycle that has now culminated, and we're getting into this. So we think this is the beginning, in other words, of a high volatility regime that could last, I don't know, 9, 12 months, just based on history. So
Okay.
it'll make it a little bit tougher in a way for the equity market, but in a way also potentially easier, because with this, more volatile tape, I don't think we're going to see the same concentrated leadership from the mega cap complex that
Yeah.
have gotten accustomed to. So for active managers, that's in a way welcome, even if it's associated with more volatility.
Okay. So, um, before I get to the sectors you like, well, let's go. Okay. So, the opportunities are going to be where, the argument that, the big rotation day where we had a record day in the Russell, and they were rotating out of high tech, mega cap tech.
Yeah, yeah,
That was really a significant day.
totally
Uh, le-
agree. Yeah.
yeah. So, is that where you're looking for buying opportunities? Maybe smaller
Yeah, listen, like,
caps?
so we, because we think that there's going to be a deeper corrective phase, and
Yeah.
you'll see that in this report from last week, we moved neutral long term after having been bullish
Yeah.
since late 23. So we think it is fairly significant. And with that in mind, we're not recommending new positioning, right? So we're saying, for the most part, especially with this bounce underway, to hold existing longs. But we'd rather use the bounce to sell as opposed to buying into the strength. So we're not
Okay.
like really adding a lot of new long ideas. This week we added Church and Dwight, which of course is quite defensive. But with this sort of breath transition, we feel that the opportunities will be more small and mid. You see that in the ratios as well. If you take a ratio of, IWM to the S&P 500, you will see that there's a notable shift in relative performance.
Yeah.
So this is a retracement, of course, with the oversold bounce. And even this morning, we talked about the real estate sector as having the same kind of outperformance over the past month or so. So the same areas of the market that have outperformed over the past month or so probably will be a source of at least inline performance, if not better relative performance going forward. And this is notable because, of course, it follows a really persistent downtrend in these ratios behind small caps and equal weighted benchmarks, et cetera. So already, even on our DeMark work with the IWM ratio, you see what's a 9 buy signal, meaning that just the pullback in that ratio should mature here pretty soon. So we feel like it's definitely a meaningful shift, and it'll make it easier to make money and outside of those mega caps. But we have to also let the top down influences guide our positioning and market timing, because obviously we want to have a higher conviction entry once our weekly metrics look better. Anything you pull up, IWM included, you can see this stochastic downturn. We just want to see something better out of the stochastics, out of the MACD, before feeling like we can go build or rebuild exposure in here. We've been recommending fixed income proxies like TLT as having, you see this big inverse head and shoulders type of formation. And of course, with that, we have a pretty major reversal lower in yields. And I think we'll see more of a bounce here near term. But the cloud model, our cloud, you can see here it was penetrated by yields with this move. So this was about
under 420 was the number.
Yeah. And I mean, it's really notable, and it just affirms what we've already sort of gotten used to here, which is a cyclical down move, but still within this secular up move. So we think it will culminate in a higher low. That the support is next around like 3.25-ish. And, we feel like that's certainly a possibility for yields going forward.
I wanted to ask you a view on gold and the dollar. I think, I don't know, a couple months ago you were negative gold. Have you flipped and you're long gold again?
Yeah, we've been bullish gold with the breakout from that big long-term trading range. So we've been more constructive on it really since that range culminated with this breakout. So back in here.
Okay.
So, and we're still bullish. It doesn't have great momentum right now, but we feel higher highs, higher lows. Yes. And we also feel with gold positions, you get this nice diversity from equities too. So we're comfortable with it for that reason as well. So just look at the moving averages, look at the cloud. They're all pointing higher. And it's
I'd love a
weathering.
pullback towards that moving average. I don't know what would cause it, but 2240. I mean, you can't find a gold bear anywhere.
No, I really, from a technical perspective, nor should you, right? I mean, here's a loss of momentum that's being weathered really well. There is an active DeMark counter trend signal that has implications for another few weeks. So we think that maybe the upside will be limited here very near term, but that it's a solid uptrend that we want to stay on the right side of.
I remember, well, look, we talk every 3 months ago. 3 months ago, you were constructive on the dollar. I believe the dollar has spoken and that we're headed lower. I particularly like the commodity currencies, Canada being one. Have you changed your view on the dollar, and can you be bearish?
We've changed our view to Hill multiple times.
Okay.
It's and I always tell people, if you find yourself changing your mind often, it's probably a trading range.
Yeah, that's good.
And you can see it here on the weekly dollar index. I mean, it's really been range bound. Within the range, there are some signs of exhaustion on the DeMark work, but not high conviction, because in a trading range, that's not really the nature of those signals. So we are not constructive on the dollar. We do think it will weaken further. Right now, it feels like probably has a near-term floor, just more consolidation, digestion, sideways action, that type of thing, being pretty oversold within its range. But you can just see, I mean, it's almost like a triangle formation.
A
And
descending triangle with the high being
mhm,
114 and call the
yeah.
floor. Oh, the floor right there at par.
Yeah, you could just draw it really however,
Yeah.
these triangles, like they're so high probability when they're completed. So that's what we've been focused on
Okay.
in the dollar index. We feel like it's going to ultimately probably resolve that lower, having already taken out the cloud-based support. But near term, I think it's probably more neutral than anything else.
All right. Check out the Canadian Katie because of the COT setup of record short and record long positions, record long, large funds, hedge funds, large short commercials.
Yeah,
So,
kind of
yeah,
interesting, right? I mean,
yeah,
this is still obviously an uptrend here,
right.
with very good resistance, but a breakout above that resistance, of course, would be really
Yeah,
meaningful.
real. Yeah,
And really, it's more not even this high; it's more this high. So
yeah.
138.62, two weekly closes above that level to us would be a pretty big breakout there.
Well, last week was a key reversal to the downside and
Mhm.
took out the prior 2 week close. I use a 2 week reversal. So
Yeah. So
that
the
was a
and the
signal.
I love the DeMark indicators as it pertains to some of these where when you see a nine unfold, you tend to get a brief countering move.
Yeah,
Today we have a six. So
yeah,
let's say later this week, if we're focused really short term,
yeah,
we could get a minor low here, right? And then theoretically, if you think that this momentum will continue to weaken, you should
yeah.
ultimately run to a 13 on the flip side, right? So
Okay.
the DeMark work has been really, really helpful. This morning, in fact, I heard you all talking earlier about a counter trend trade versus S&P. Here's the S&P futures. This is a chart that we put in our morning note every day. And I just, again, here love how the DeMark indicators can guide us just in terms of inflection points intraday, with
Yeah,
implications really only for the next day or so. So this is very,
right.
very like hyper short term. But notice as we make this retracement coming up on the 61.8% retracement here, there is the first countering signal. So that's really just as of this current hour or bar.
Okay.
This is a 60-minute bar of the S&P futures.
Okay. Why don't we wrap it with, I know, uh, since we've been talking for quite some time, you've liked the oils. It's been, kind of wide ranging sideways, but it looks like it's trying to make a move here, Katie. Uh,
I would agree.
based on,
We actually have a triangle here too, long term for crude, and it's been our belief that we'd see it resolved higher. And
yeah, okay,
we say that not with a ton of confidence. It
yeah,
certainly has been taking its time, right, within this triangle formation. But there are some indications sort of behind the scenes that will get ultimately a breakout above this downtrend line, which is increasingly surmountable in terms of it, week
right,
over week. So we feel like we're going to see it resolve to the upside. And because these triangles are so high probability, we feel that it would see immediate upside follow through. So, and
right,
we also like the energy stocks in a way.
right.
They've been relatively over.
Exxon, I
Yeah.
saw Exxon just broke out last week.
Yeah, and I don't know if they're anticipating perhaps this kind of breakout in crude oil, but again, here you can get some, diversification, right, from the energy sector that tends to have a mind of its own. And if we were to see Exxon for one, you see the resistance area is
Yeah,
basically in line. So
like
if we start to
cup
see
and
that,
handle.
yeah, right. If crude advances from that triangle, I think
Yeah,
that's where we really can assert a position, and it could honestly be something
yeah, Middle East. Uh-oh.
including copy its corrective phase. So
Okay. And I just want to let people know that Katie has her own ETF, and uh, if you like what Katie does, and she's very good, very good. Let me ask you,
thank you,
Katie,
Deb.
on your ETF, for example, you're looking for some downside in the S&Ps. Can you do anything in your ETF to take advantage of it? Do you have the parameters to take advantage of maybe bearish ETFs or anything like that?
So the way we're managing risk in the ETF is through asset allocation primarily, and we have
Okay.
three what we consider to be like risk off positions that we'll take. One's essentially our cash equivalent, which is short-term treasuries.
Okay.
We also use long-term treasuries and gold. So
Okay.
together, those three provide sort of diversified risk off exposure, and it helps a whole lot, as you can imagine, during the downdrafts like in 2022, very significant outperformance in that kind of environment. And really also in corrective phases, tech has outperformed the S&P by a very strong degree. And that's part of its design, of course, is to limit those drawdowns. So we're really pleased with the performance. And I do expect with this corrective phase to move very slightly risk off. When we tell people we would sell into strength, we're not talking about, sell the whole, market or sell your 100% of your positions, but rather just risk, manage risk, right? Maybe reduce partial exposure, whatever's comfortable from a risk management perspective.
Okay. Katie Stockton does it again. Covers a whole board. Anything else that we haven't covered that you'd like to share?
Yeah, dollar yen. I heard you talking about that
Okay.
as well, and I know that the cloud model isn't as widely used for your group here, so I thought I'd show that because I thought it was really very interesting. When we see here's dollar yen, look at it
Right.
just having come right into that
Right at
pattern.
the bottom of the cloud.
Isn't that
Okay.
wild? And that's what
Yeah.
happened back in here.
See, you're still amazed like I am when these things work
Oh
and
yeah,
price
yeah.
reacts to them.
And I,
Yeah.
I think for of all things that it should work for, it should work for a Japanese currency, right? Because
Yeah,
that's the
that's
model
right.
is developed, and and it's
Yeah.
wild. So we also I think it's a great lesson as to why we always wait for confirmation of breakouts. You see these false breakouts back in here, so we always wait for a couple of weeks.
Yeah.
So we actually do think the lower boundaries at risk of breaking, probably not here in the very near term, but ultimately would continue to watch this lower boundary, currently 140.77. But you can see looking at just to October, it's closer to 146. So ultimately, we think that will break.
So the yen, Katie, after a long hiatus, is acting like a safe haven currency.
Yeah.
How about that?
Yeah, exactly. Who'd have guessed?
Do you believe that they're 75% through the unwind of the carry trade? Because people act like, they just started putting on this trade 6 months ago.
Yeah.
This trade's been on for years, the yen
And
carry
that's
trade.
that's right. I know, and I don't think that's probably measurable, right? So it's
Yeah,
speculation, and this is meaningful. This is
yeah.
really these are the monthly downturns that we have here.
So
So
that paints a pretty, if you believe in the correlation, which I do still, they've remarried the yen and yields. And they
oh yeah,
got back together and they're, you know, going to try and work it out, get some counseling this time.
there you go.
So,
And I think sideways to lower here too, just like for yields, right? And maybe it
yeah.
floats back into the monthly cloud here, which in 2026 resumes to the upside.
Thank you so much, Katie.
Of
I
course,
always look,
yeah.
I always look forward to talking to Katie, and everyone here does, enjoys it. You've helped me today
Oh, good. I'm
because
glad.
I was a little, conflicted about the S&P because I saw the potential maybe we get one more blow off for a third drive to a top. But, um, you know, uh, I spoke to a legend last week and he said we have to consider all possibilities. And,
Hmm.
and that means that you have to understand both the bull and the bear case, not just your side or your narrative. You have to take a look at what the other narrative is. Do you do that?
I read a lot of research, yeah. And I
Yeah,
think it's really fascinating how, especially technicians, right? How we can look at the same charts and have different takeaways.
yeah,
And it often comes from the indicators and tools that we're using, but
yeah,
always valuable for sure.
yeah. All right, Katie, thanks so much. I hope you have a great summer.
Thank you, Dale. You
Um,
too.
and and I'm a fan, and I think that people should check you out at fairleadstrategies.com and give your ETF a look, especially if they don't have their hands on the market and with their retirement type money.
Yeah, for sure.
because that's going to, that's your nest egg, and diversify away from yourself if you're handling all of your retirement accounts. And her ETF is like having, Katie manage your money for a lower fee than a hedge fund.
I
That's the way
appreciate
I
that.
see it.
Yeah. Thank
So
you.
thank you, Katie.
Of course.
I'll catch up with you. I'll
Yeah,
talk to you on
sounds good.
I'll talk to you on X.
Okay, that's a
All
deal.
right.
Take care.
All right. Katie Stockton, everybody. Great presentation, leans towards selling this rally, maybe not right away. Mind changing on the dollar, bullish bonds, still likes the oils, bullish gold. That's it. You're a fan too, Salim? What's your OnlyFans? Oh, okay. I don't have any fans. Okay,
You do,
Michael.
Dale. I'm your
Oh,
fan. There
I have a fan. All
you
right, now,
go.
and
Take
you know
care.
what? I need one. It's going to be 98 here today. So thank you, Katie.
Of
I'll
course.
see you. All right, everyone. Don't just count your pips, count your blessings. Having great people with good research and great ideas, if you don't know, is a blessing. And Katie plants good seed. She has, no axe to grind, whether you buy her ETF or not. She came here to share ideas that took her, years to become good at. So you reap what you sow. And so I'll see everyone tomorrow. Adios.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.